Carmiel, it's interesting as we hear Secretary Blinken there suggesting that in Gaza specifically, in the conflict between Israel and Hamas, the intensity needs to be lowered. At the same time, Bloomberg is reporting that the U.S. is actually considering perhaps upping the intensity when it comes to action against Houthi rebels, which are, of course, based in Yemen, sponsored by Iran. It's another proxy for Iran because of what's happening in the Red Sea, the disruption to merchant trade flows and just maritime behavior. If the U.S. were to go on offense against the Houthis, would that be a mistake?
I think that the threat posed by the Houthis is not limited to Israel. It is really at this stage a global threat to international shipping, as different companies who have been trying to send goods via the Red Sea are now under attack. And so we have seen the Houthis designated in the past. I think that the Houthi threat as an Iranian-backed group has long been a priority for the U.S., including as demonstrated through their support of Saudi Arabia and the UAE during their war against the Houthis. I think that this is an important and obvious next step, frankly, from the U.S. I do think it's useful to think about the different dimensions of this conflict. It is not only what's happening in Gaza, but also what's taking place right now in Syria, in Lebanon, and of course in Yemen, as different actors, in many cases backed by Iran, are continuing to threaten Israel, and Israel is responding in kind. And so even as the assaults in Gaza may wind down, we may see a wind up on the northern border in addition to what we may see vis-a-vis the U.S. and the Houthis.
Well, and it becomes, I guess, a calculation for the U.S. as well as to what other Arab countries and Arab allies would like to see done here. Because you take the Saudis, for example, which have actually seen their energy infrastructure in the past damaged by Houthi attacks, and by all accounts would like to see them handled in a bit more of a measured way. If the U.S. were to escalate this to a certain degree, would that be problematic for our partners in the Middle East?
I think our partners in the Middle East have been very vocal in terms of both their involvement in these conflicts and what they are and are not willing to tolerate from the U.S. Fortunately, the United States has very close relationships with Sunni countries across the Gulf who have been engaged in differing degrees in terms of how we engage with the Houthis and their involvement with Israel. So I wouldn't actually expect escalated tensions with Sunni countries if we were to escalate with the Houthis. To the contrary, I think there would be quiet support for that.
And while we think about, conflict or at least disruption in the Red Sea, obviously conflict when it comes to Israel and Hamas, it keeps bringing us back to this very same question, Carmiel, which is, what is the end game? The day that this all ends, whenever that day is, however far out into the future, what does the order actually look like? How are you thinking about that next day?
Yeah, I think that this is really the million-dollar question, and it's something that the Israelis have not been serious about grappling with, but are starting to get to. I think the question is in the region, how can we bring about a more peaceful, stable Middle East, starting with Gaza, but really across the Levant? And this is going to be a huge challenge. I think that we are potentially facing a long period of continued violence and instability, even if we are entering into a lower intensity conflict, one that will then create space for what I hope will be political negotiations that could yield some kind of a two-state outcome between Israelis and the Palestinians that would include the Palestinian Authority retaking control and administering Gaza and essentially uniting the two territories. I think that would be a pretty significant change, and one that could at least be a positive outcome from what has been a very difficult 76 days of war.
Yeah, and difficult is almost understating it. We appreciate your insight, Carmiel. Thank you so much for joining us. That's Carmiel Arbit of the Atlantic Council, where she is a senior fellow. We'll have much more coming up on Sound On. This is Bloomberg.
stories, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ, the Russell 2000, all pushing higher right now. Rebound from yesterday. S&P now up 29. That is a gain of 0.6%. The Dow still has a way to go to make up yesterday's losses, but right now up 169, up 0.5%. The NASDAQ Composite Index up 127 now, up by about 0.9%. 10-year yield 3.88%, with the 2-year that's yielding 4.34%. Gold up $13 the ounce now to $2,044. That is a gain of 0.7%. And West Texas Intermediate crude oil down 0.6%, $73.79 for a barrel of WTI. A steep decline in the number of tankers entering a vital Red Sea conduit suggests that attacks on ships in the area are further disrupting a key artery of global trade. So far this week, only about 30 tankers, including crude oil and fuel carriers, have entered the Bab el-Mandab Strait, which lies at the Red Sea's southern end, according to vessel tracking data compiled by Bloomberg. It was an issue that was addressed minutes ago by California Congressman John Garamendi.
We're calling on allies, other countries, some of whom are NATO, others are not NATO countries, to join with us in providing the necessary naval support to make it clear to the Houthis, and more importantly, to Iran, that they cannot interrupt the international flow of shipping, not only oil and gas, but also all kinds of goods that are shipped through the Red Sea and the Suez Canal.
And you can hear more of that conversation with Congressman Garamendi on the Sound On podcast. Salesforce has won itself a new bull, with Morgan Stanley analysts predicting that the artificial intelligence wave will help propel the software maker's shares to record levels. Salesforce shares up now by 2.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
I am indeed Kaylee Lines here on the fastest show in politics. Joe Matthew is taking a well-deserved day off, but we have much to discuss, as we have been discussing over the course of the last 2 days, specifically when it comes to former President Donald Trump. Colorado State Supreme Court making history in many ways this week when it ruled he is ineligible to be president on grounds of the 14th Amendment because of his actions on January 6th. But ultimately, this very likely is going to end up being a decision that the Supreme Court of the United States has to make. I actually, on this program yesterday, spoke with Lawrence Tribe, who is a well-known Supreme Court expert and professor at Harvard Law, and he told me he thinks the High Court will uphold the ruling. Here he is.
Well, I don't have a crystal ball. I think if they follow the law, Judge Michael Ludig, a very distinguished conservative, and I think they will have to affirm the decision and render an unexpected, perhaps in many ways unpopular ruling that keeps them off the ballot. They find some way consistent with the 14th Amendment and their oath to the Constitution, some exit ramp, some way of not keeping them off the ballot. I don't really see what it could be. But it's a pretty ingenious court, and they have found ways to do some pretty strange things.
So contrast that with what I was just told earlier this hour by Democratic Congressman from California, John Garamendi. Here he is.
I believe that Trump should be given the chance to be on the ballot, and I suspect the Supreme Court will so rule. Were that not to happen, I believe we'd have a very serious, very, very serious political crisis in the United States if, in fact, Trump were not allowed to be on the presidential, on the ballots in November.
So I want to get another take now by actually someone who sat on the January 6th committee in the House of Representatives. The report that came from that committee actually showed up not just in the Colorado District Court's ruling that was in question here, but the Supreme Court said that it had every right to be used as evidence in this case in particular. Joining me now, I'm pleased to say, is former Congresswoman Stephanie Murphy. So, Congresswoman, thank you very much for being with us. As someone who sat, as I said, on the January 6th committee, who of those two individuals do you think is right in this case?
Well, I think one person was arguing the legal and judicial angle of the case, and the other was looking at it through the political lens. I have all the respect in the world for Congressman Garamendi, but as he explained himself, he was concerned about the political consequences of a Supreme Court ruling that kept the former president off the ballot. I think, it's going to be up to the courts to apply Section 3 of the 14th Amendment, but without a doubt, the January 6th committee did show that the former president engaged in insurrection or gave aid or comfort to those who engaged in insurrection, which is the language that is used in the 14th Amendment that would prohibit people who conducted such activities from being on a ballot.
So do you feel good about the fact that the committee's work is being used as a legal basis here for this? Do you think that that's justified, or should he be actually charged with insurrection and formally convicted first?
I think that the January 6th Select Committee provided a lot of information that has been used not just in this court case, but in a number of cases, whether that's Georgia or otherwise, as it relates to prosecuting the folks who committed crimes on January 6th. January 6th Select Committee really was the first time where we painted a full picture of what happened. As you might recall, in the days and months before the January 6th Select Committee began our hearings, the American people saw bits and pieces, the phone call to the Georgia state officials. They got little pieces of what happened in the run-up to January 6th. But really, it was the Select Committee that painted the broader picture, the full narrative of all of the activities at the local, state, and federal level to try to change the outcome of a fair and free election. And so it's not a surprise to me that that information and that evidence is being used by the courts.
So if it is indeed being used in the courts and therefore matters to the courts, do you think it matters enough to the American electorate, to the base that this former president appeals to, that does not seem to be swayed by what the committee presented or what frankly, the courts or other legal authorities have to say about the matter?
I've been a bit dismayed by the short-term memory of the American electorate. I think we did see an initial impact from the January 6th Select Committee hearings in the election that immediately followed. We saw the American people reject election deniers pretty much across the board, across this country. But now there are other issues that are crowding the voters' minds, and they're starting to sort of set aside the shocking and stunning activities of the former president on January 6th and focusing on some of the other issues that are more important as voters go to the polls. As an elected official, I was a member of Congress, and every campaign, we always talked about what matters to people when they go to the polls. And usually it's about economic security and physical security. These more lofty ideas of democracy sometimes are a bit harder to ask people to cast their ballot purely based around that. And unfortunately, that's really problematic, because you can't have a strong economy and physical and community security without having a functioning democracy.
And finally, Congresswoman, we only have about a minute left, but when we think about voters heading to the polls and deciding who ultimately is going to be in power, do you worry about potentially the precedent that could be set here if indeed someone is kept off the ballot and it's seen as political?
I think right now, no matter how the Supreme Court finds in this case, it's going to be seen as political. They are under a lot of scrutiny at this point because of some of the misconduct, the accepting of gifts. And so there are a lot of questions about the Supreme Court's legitimacy as well as its ethical obligations. And so whichever way they find in this case is going to be, unfortunately, seen as political. And that hurts our country broadly when our institutions are undermined and people lose faith in that way.
All right, Congresswoman, thank you so much for joining us. That's former Congresswoman and member of the January 6th Select Committee, Stephanie Murphy. This is Sound On. on Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Shares of Cytokinetics are jumping the most in more than 2 years after a report that two large drug makers are considering buying the biotech firm. The company is seeking takeover interest from Novartis and AstraZeneca. This according to Deal Reporter. Cytokinetics up now by 22.5%. Micron Technology is higher after the largest American maker of memory semiconductors gave a strong revenue forecast, indicating that data center demand is compensating for a slowly recovering market for PCs and smartphones. Angelo Zeno is senior equity strategist at CFRA. He's got an $85 price target and a buy rating on the stock.
When you think about, on the memory side of things, really the kind of the secular story out there is that content growth story, not only on the data center side of things, which is, we think unbelievable given kind of, the shift that we're seeing towards these, foundation models, but also kind of in areas like smartphones and PCs where, AI will also be a theme kind of at the edge. And on that side of things, you're also going to you need more memory.
And right now, Micron shares, they are advancing by 8.4%. Carnival Corp shares higher after the cruise line operator reported a narrower than expected adjusted loss the fourth quarter. Shares of Carnival up now by 5.6%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
We are almost wrapped up here with the second hour of Sound On, and we haven't gotten you a check yet on world and national news, so let's do that now. Scott Carr joining us from the 99.1 newsroom here in Washington. Hey, Scott.
Hey there, Kaylee. Thank you. A mass shooting by a gunman at Prague's famed Charles University has left at least 15 people dead, including the assailant, in what a government official called the worst mass attack of its kind in Czech history. There's no evidence that the shooter, a 24-year-old man who killed himself at the end of the rampage, had any links to terrorism. Reports say the shooter was a student at the university. The U.S. says serious negotiations are underway over the possibility of a new truce in Gaza and the further release of Israeli hostages by Hamas. Reham Jafari's with Action Aid Palestine. She says the international community should be doing more to try and secure that new ceasefire.
People are dying of hunger and starvation. Children are dying of hunger and starvation.
But it's reported Hamas has rejected an offer of a temporary pause in fighting during talks in Cairo yesterday. Jafari says that delay will mean more deaths of women and children.
This shows how the morals of international community fail to address a catastrophe.
Hamas officials say 20,000 people have been killed in Gaza since a military campaign was launched by Israel following the October 7th terrorist attacks by the group Hamas. A nonpartisan public interest research group says violent threats are being made on social media against those Colorado Supreme Court justices who issued a state decision to bar former President Donald Trump from that state's Republican primary ballot. The group Advanced Democracies identified what it calls significant violent rhetoric against the justices, often made in response to Trump's posts about Tuesday's ruling by the court on his own social media platform. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg. Back to you, Kaylee.
Scott, thanks very much. Scott, of course, knows about Bloomberg News Now, and if you don't, you should. Because Bloomberg is now in your dashboard. You can get it on Apple CarPlay, Android Auto. You get access to every Bloomberg podcast, audio forms of stories from Bloomberg News, and the latest headlines whenever you want them. This is all from Bloomberg News Now. It's presented by our sponsor, Interactive Brokers. It's free with the latest version of the Bloomberg Business app. You can get it on your phone. You get it in the App Store. You get it on Google Play. You just download it, connect your phone to your car, and that's all you got to do. You get started. So you can do it now. It'll give you access again to every Bloomberg podcast, and you get the latest headlines at the click of a button from Bloomberg News Now. And speaking of the latest headlines, I do want to mention quickly what we're hearing out of the Pentagon, because Major General Pat Ryder is currently briefing reporters there about what's happening in the Red Sea. He says more than 20 nations are now in the task force in the Red Sea. This, of course, was announced by the U.S. in the aftermath of what we have seen stepped up attacks from Houthi rebels that are backed by Iran on maritime vessels. As a result, there's a lot of ships that are deciding not to go through the Red Sea or the Suez Canal, but instead go the long way around Africa, and this potentially could snarl supply chains, raise costs in the process. So this is something the U.S. is really trying to handle with this task force. Ryder, the Major General, who I mentioned is speaking with reporters, says the coalition in the Red Sea is a, quote, highway patrol of sorts. But of course, according to Bloomberg's reporting, there is an ongoing conversation the U.S. is having about whether or not this patrol goes far enough. This is mostly defensive. They're doing things like shooting down drones that are bound for other vessels or helping other ships in need. But should the U.S. actually be going on offense against the Houthis here and striking them directly? This is a conversation I'm going to pose later on today to Mark Kimmett. He's a retired brigadier general in the U.S. Army and actual former assistant secretary of state for political military affairs. It'll be really interesting to get his perspective, not just on this conflict, but also the ongoing conflict in Ukraine, knowing Congress has left town for the year without passing further aid for that U.S. ally. So a lot is ahead on Balance of Power at 5 p.m. this evening on Bloomberg TV. I hope you tune in and join us, and I hope you come back tomorrow here on Sound On. We'll have plenty more coverage of this story and, of course, the story surrounding former President Donald Trump. So come back to us. In the meantime, though, keep listening because Bloomberg Business Week starts right now.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
And happy Thursday, everybody, live from the Bloomberg Interactive Brokers studio, streaming on YouTube and on Bloomberg Originals. It's Thursday, December 21st, 2023. I'm Tim Stenovec, along with Bloomberg Equality Team Editor Jennifer Ryan, who's filling in for Carol Masser this afternoon. Jennifer, good to have you back. You've been on the radio a lot lately. I've heard you a lot, but in the mornings, not on our program.
I know, so it's an absolute treat to be here with you. Thank you so much.
Well, thank you. Hey, we got a great program coming up. U.S. stocks are bouncing higher after Thursday's data signaled that the economy was headed in the right direction, so more data for Team Soft Landing. Investors, traders still continuing to make those bets that we're going to see some deeper interest rate cuts from the Federal Reserve next year. We have got a great roundtable coming up in just a few minutes. Vince Signorella is back in the Bloomberg Interactive Brokers studio, so we're going to be speaking with him in just a bit. Also, Wall Street's dwindling camp of bears is hanging on to its recession calls. Among the most read on the Bloomberg terminal today, Steve Matthews down in Atlanta. He's going to be joining us as well to talk about those folks who are saying, you know what? We're not necessarily on Team Soft Landing. We think there could be some trouble ahead.
And then also, we're going to have a 25-year veteran of the cybersecurity industry joining us to tell us about the threats that keep him up at night.
All right, I'll give you a hint. It's AI. That's what he's concerned about. Hey, some good news. We're living longer. Okay, that's good news. Okay, but there's also some bad news here. Society is not set up to handle people living regularly into their 80s, 90s, and even beyond. More from the longevity issue of Bloomberg Business Week a little bit later in the program.
And then after the bell, we're going to get Nike earnings, and we're going to bring you those numbers just as soon as they cross.
Yeah, still earnings season. Nike, everybody's going to be looking for what's going on in China, so we're going to have Red Brown joining us a little bit later, too, as those numbers cross. Also, the private equity firm that's tapping America's spring water. Experts are worried that sensitive springs, creeks, and groundwater supplies from Florida to California are paying the price. We're going to be checking in with our reporter in California all about the latest on this. And then there's today's big take. It's among the most read on the Bloomberg terminal. We talk a lot about private credit and the way that private credit has grown over the last couple of years. Well, JP Morgan and Citi are copying from the private credit playbook. We check in with our reporter on that in just a bit. We are seeing the S&P 500 in the green right now, higher by more than half a percentage point. The NASDAQ up 0.8%, and the Dow Jones Industrial Average up 0.4%. We got a great program. First, though, let's bring in our TV colleagues, Scarlett and Romaine, because Bloomberg's countdown to the close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Scarlett Fu. We're joined right now by our colleagues Tim Stenovec and Jennifer Ryan. Jennifer in today for Carol Masser. Welcome to our audiences across our Bloomberg platforms, television, radio, originals. And yes, Tim Stenovec, those folks still streaming us on YouTube.
You can't get away from us. We're everywhere, no matter how hard you try. Hey, do you guys remember yesterday we were talking about the high cost of childcare, the high cost of college? Well, I have bad news because it turns out it's even expensive for your kids after they graduate from college and move back in with you. And then you can no longer save for retirement because you're supporting them. Okay. I'm being serious. There's a story on the Bloomberg terminal today. It's a great story by Suzanne Woolley and Paulina Cachero. Great story as in it's well reported and well written, not great as in great news for what's going on in our economy right now. It turns out that U.S. parents are spending about $500 billion every single year on their 18 to 34-year-old children. That's double what they're 34. Putting away toward
That's not
retirement.
A child anymore.
Yeah,
they're always your child, unfortunately. I mean, more fortunately, in terms of financial support, they're always.
Let me rephrase that. At 34, you're not going to be my dependent. How about that?
That's according to estimates from a Merrill Lynch
I'm not sure at 19
study.
You're going to be my dependent, but that's a whole nother.
Look at this, though. I mean, it's got some serious economic implications, Jennifer.
Yeah.
Yeah, it does. And one thing that's very worrying about this is that we already know that Americans don't save enough for their retirement. Mm-hmm. But this story is full of really interesting anecdotes, and one of them shows that really nothing changes. This one woman's got her children living with her, and she still can't really control their spending because one of them went out and bought a sports car.
Oh God. Yeah, this is like a parent's worst nightmare. And of course, with the housing market the way it is, right? There's no supply out there. Mortgage rates are sky high. No one's going to be able to buy a house. Even if they wanted to form a household, they're not able to. So they're going to live under your roof forever.
Yeah, okay, it depends. It depends on the family. I mean, my mother made it clear to me that, you know, once I graduated from college, that was it. That the gravy train stopped there and I was basically on my own. You know, you got to just nudge them out of the nest. You can't be afraid.
You
gotta fly. They got to fly on their own.
Fly away on your own. I think easier said than done for a lot of people. But yeah, I think, you know what, Romaine? I'm going to subscribe to that rule. I know my kids are young now.
Tim.
Tough
That's going to save
You have a couple of years, Tim, to like, you know, get your bearings straight in terms of how you're going to present this to your kid.
Tim, you got like 15 years to figure this out.
When do they start earning money? That's what I want to know.
15 officially, but maybe you can start them earlier,
some states,
right?
I think you can start them working at like 10.
All right, good to know.
Hey, you guys, there's another story that I found really interesting, which is in Sweden, they're really pressing for calls to reduce the number of trading hours for the Swedish exchange. The traders there are saying that it's really getting in the way of life. They trade for 8.5 hours, which is 2 hours longer than the trading day here in the U.S. It's, you know, an issue for working moms especially, and certainly there's lack of work-life balance. They don't get a break for lunch hour, for instance. And I know that we don't get a break here in the U.S., but we also don't start trading until 9:30 a.m. and we stop at 4.
And we have to work during the month of August, unlike people in Sweden. So.
Well, you can go back to like the early days. I remember like in the early days of, what was it, down by the buttonwood tree or whatever they called it, which is probably just a myth. But yeah, I mean, didn't they like trade for literally like 30 minutes a day or something back then? And then somehow we expanded to 6.5 hours here in the U.S. and whatever they're doing in Sweden, 8.5. What are they trading in Sweden for 8.5 hours?
I was shocked to see.
No, Volvo's not traded there.
But then
it's like a Chinese company now, I think, isn't it?
Yes, exactly.
That's good.
Yeah.
Yeah, you sort of wonder, though, what's the upside of being open for so long? Because surely that must make for some very choppy liquidity situations.
Yeah, that's a really good point.
I wasn't joking about my August comment. I went to Sweden in August a few years ago, and my Swedish friends were like, why did you come here during August? Nothing is open because everybody's on vacation. Literally, the entire country goes on vacation during that month. We still had a great time. Highly recommend the trip.
Yeah, I think most countries do that other than, you know, one that shall remain nameless.
It's just us. It's just us.
Well, apparently we did all go out on vacation in August, or at least we stayed around here and spent a lot of money.
I'm going on vacation tomorrow.
What?
Oh.
But it's okay.
Are Carol, both you and Carol allowed to
we're
vacation
both
at the
out.
same time?
We're not allowed to. We're doing it, though.
Oh, okay.
She's not on vacation. She's recovering.
From vacation.
But don't worry, because before I go on vacation, we're going to be back here in less than an hour for our Beyond the Bell coverage right here on Bloomberg TV, where we take you through today's market close on Bloomberg TV, on Bloomberg Originals, on YouTube, and of course on Bloomberg Radio. We'll see you in just a bit. Well, U.S. stocks are clinging to an advance this afternoon. We got some data earlier today that signaled the economy was headed in the right direction. GDP was revised lower to a 4.9% annualized rate in the third quarter. But there are some folks out there who still think a recession is coming, and they are not backing down. Steve Matthews writes all about it. It's among the most read on the Bloomberg terminal. He's economics reporter for Bloomberg News. He joins us from our Atlanta bureau. And here in our Bloomberg Interactive Brokers studio is Vince Signorella, global macro strategist for Bloomberg News. Vince, I want to start with you just to get an idea of kind of a postmortem on what happened yesterday, because just before 3 p.m. Eastern time, stocks were higher, as they've been almost every day since October 27th. And then we saw a sharp reversal, and we saw stocks close on the S&P 500 about 1.5% lower, recovering a little bit today. But what's the read on the trade?
As you know, I do this walk product where I talk to traders all day, and as it started to collapse, I was just getting pinged by so many people what's going on, and I did not know. And it's one of the things I said over the mic to traders. We're losing ground, but no one seems to have a clue. And immediately a trader from a major house pinged me and said, what's called it's a zero DTE trade, which is 0 days treasury expiry. And basically it expires at 4:15 p.m. after the close in the futures market. And someone had put on an 8,000 lot trade of about an 8,000 lot trade at 47.55 on the S&P, which translated to a dollar equivalent of 1.9 billion US dollars.
Wow.
So as the market began to trade below that strike price, and obviously the person who put the trade on was trying to shove it through, stop losses were kicking in. The people who owned this option had to sell to cover, and it just snowballed, and the S&P went down about, I think it was 60 points from that moment, and still struggling to recover today.
But I guess now, we're at least back in the green.
Yeah.
So this is a win, I suppose. But I mean, what does that tell you? What should we take away from that in terms of sentiment, getting back onto the track of thinking more about fundamentals?
There's a good side to it. There are a lot of week long positions out there that got wiped out yesterday. So those trades are out. There's not as many people who are long the S&P at the moment. They were just taken out yesterday. So you have the more of a core position that people are in it maybe for a little bit of a long haul. Probably going to see a little chop because not everybody bails on those positions. So people who are wearing those trades on the way down might not, have puked yesterday like a lot of other people. So as it goes back up, you're going to see people looking to trade out of those longs, which they got into at higher levels yesterday. So between 4,700, 4,750, you're probably going to see a little give and take over the next week into the close of the year. We may have put in the high for the year. But, then again, we get into the first quarter, new earnings, new start, and we'll see where we go from there.
Okay, well, speaking of the first quarter, let's zoom out a little bit. I want to bring in Steve Matthews, economics reporter for Bloomberg News. Steve, as I mentioned, you and Katya Dmitrieva have a great story out on the Bloomberg terminal. It's about the dwindling number of bears who continue to cling to their recession calls. You and I have spoken about this for better part of 2 years at this point, and you've shared with us the data month after month. And it hasn't looked like there would be a recession, given what we're seeing when it comes to a number of jobs added each month in this economy. Still, though, there are some bears out there. You spoke to them. What are they telling you about why they think there's a recession ahead?
Yeah, it is interesting. I think it was like 2 years ago, the first recession call that I remember was Denny Blanchflower, who was like basing it all on consumer confidence surveys, which have been really dismal over the last couple of years, but we haven't gotten a recession. And now you have, Citigroup, Deutsche Bank, Wells Fargo, they're all still on the recession bandwagon. And the basic view is that the labor market has started to moderate. That's going to continue, and you're going to see continued softness in the labor market. When the labor market starts to crack, that brings down consumer spending, and therefore you end up with a recession. And the thinking has been, interest rates are at a 40-year high. The Fed has been really aggressive, the most aggressive in decades, and that eventually that is going to have an impact on the economy. And, that really didn't happen this year. I mean, it's been a really great year from the standpoint of the labor market, the economy, everything but really confidence, which has been, which has started to pick up in the last month or so.
Yeah, I guess we'll really have to see how consumers fare with their end-of-year spending because, we also know that they're under a bit of pressure. They've run down some of their pandemic savings. They don't have a lot of help from the government for childcare. And, as you say, there's some weakness showing in the labor market. And inflation still has a little ways to go before it comes back down. It's not necessarily so done right away for the Fed. So, it looks like there's still a bit of support for that bearish argument.
Yeah. I mean, inflation has come down, but the pain from inflation is still there. I mean, it's like if you're paying 20% more than you were 3 years ago for some product, you're remembering what things were like 3 years ago, and that affects you. And for many people, there was a period of time when incomes did not keep up with inflation. Inflation has actually started to come down. I mean, you see it in gas prices, you see it in some food prices, but it's going to take a while for that to affect confidence. But it is really interesting, though, as you make the point that there are, particularly at the lower end, there are people who are under stress. You do see, some delinquencies picking up. There is a case to be made that we could tip into a recession, although that is not the majority case right now.
And it's certainly as of a few months ago, it was no longer the base case for the Federal Reserve. Vince Signorella, come on back in here. Where do you stand when it comes to recession or no recession? I mean, you're talking to traders every day. What do they think?
Well, I think Steve just made a good point at the back end of that, which was he's talking about delinquencies. If you look at auto loans, consumer credit, personal loans, student loans, the delinquencies have been rising. And then you put in the fact that revolving credit is at an all-time high. It suggests that this economy has been running on a lot of borrowing, and that borrowing is obviously going to reach an end at some point. When that end game happens, I think you'll see the soft landing that everyone's talking about. I don't think we're going to crater, but certainly it's going to run out of gas. And on the positive side, that should stimulate Fed rate cuts or accelerate rate cuts, maybe a little faster than even the Fed is suggesting, because somehow we're going to have to get disposable income into consumers' hands. It's not really coming from wages. It's certainly, not really helping, as Steve just mentioned, from inflation. So inflation does going to need to come down, and the prices of things are going to have to help consumers in order to keep that spending going and earnings up.
Well, I guess while we're waiting for the Fed to make its first move, I mean, my question is, how much help can we get from the bond market? Yields have come off a very long way. I mean, can we expect any more assistance there and have the bond market doing the Fed's job for it?
Yeah, the problem with that is you've got the short end, the 2-year on end, tied to where the Fed funds rate is. So until the Fed really makes a move, there's only so much traders in the bond market can help. Otherwise, you have this arbitrage opportunity that's created, and they're not going to give away free money. The upside, as I would put it, is if you talk to traders, and this is the conversation I'm trying to have with them, is stop worrying about how many times the Fed's going to cut. Don't worry about 3 times next year, 5 times the year after. Worry about the fact, or not worry about the fact, that from the last meeting to the meeting before that, we went from the next move is going to be a hike to the next move is going to be a cut. Yeah. And they've changed policy. So now we're in a downward phase of rates. QT is going to go away, and eventually we're going to get the cuts to the extent that everybody wants.
Hey, Steve Matthews, got 30 seconds left for you. Just give us the last word on sort of the next data point that you're going to be watching as we head into the new year, to tell us whether or not we are going to hit a recession.
You really need to be watching the PCE inflation figures tomorrow, because there are forecasts that you could have PCE and core PCE, excluding food and energy, at about 2% for the last 6 months, an average of 2%. And that would signal that the Fed is basically right at target. And if that's the case, the Fed could start getting more aggressive earlier in the year. I mean, as early as March. And that would have profound effect on the economy.
All right, keep an eye out for tomorrow. Steve Matthews from Atlanta, Vince Signorella here in our studio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. It is official. Apple is pulling watches from its online store to meet a government-ordered ban. The ban on Apple watches was ordered in a patent technology fight. Apple shares now down just about 0.3%. Apple declining as the rest of the market moves higher. NASDAQ right now up 140, a gain of 1%. Tech-heavy NASDAQ 100 index doing a little bit better, up now by 158 points, up by 1%. S&P, to put it all in context, up 31 now, up 0.7%. The Dow up 196, up by 0.5%. 10-year yield 3.88%, with a 2-year that's now yielding 4.35%. Spot gold higher by $12 the ounce, 2,043. That is a gain of 0.6% for the precious metal, while West Texas Intermediate crude is down 0.6%, 73.80 for a barrel of WTI. The trading year of 2023 rapidly drawing to a close as money managers look ahead to 2024 and back on this trading year. Kim Forrest is Chief Investment Officer at Bouquet Capital Partners. And on Bloomberg Markets this morning, she was asked what she got right and what she got wrong this year.
So up 25% on the S&P and up almost 50% on the NASDAQ. I didn't have that, but I did think that we can avoid recession, and it's largely because of the technology that companies deploy, and they can see changes almost in real time for demand, and they cut back supplies.
And you can hear more of that conversation on the tape podcast. You can download it wherever you get your podcasts. After earnings, CarMax up by 4%, rival Carvana up 1.75%. It is the end of the line for Hyperloop One. That is the futuristic transportation company building tube-encased lines to zip passengers and freight from city to city at airplane-like speed. Sources say it is shutting down. It was once a high-profile startup that raised more than $450 million since its founding in 2014, according to PitchBook. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Tim Stanovic again, Jennifer Ryan in for Carol Master this afternoon. Jennifer, a couple years ago, I think it was the 2022, maybe 21, Milken Institute Global Conference in Los Angeles. It's in the spring. Carol Master and I were there, and everybody was talking about private credit and how it was going to be the year of private credit. And they were right. It's the subject of today's Big Take. It's among the most read on the Bloomberg terminal. It's now all about how JP Morgan and Citi are copying from the private credit playbook. Wall Street has lost out on billions in fees as direct lenders lured away corporate borrowers. The future of their leveraged lending businesses depends on how they adapt. Paula Seligson is private credit and leveraged finance reporter, senior reporter for Bloomberg News, She joins us on Zoom from New York City this afternoon. Paula, good to have you with us this afternoon. Congratulations on the Big Take, which, by the way, everyone can go read at bloomberg.com/bigtake, as well as on the Bloomberg terminal. I just want to start out by defining private credit for all of our viewers and listeners. There's a really, really good diagram in your story, but explain exactly what private credit is and how it's different from traditional lending.
Yeah, thanks for having me on. I think it's good to start with traditional lending because when you get to really big companies, it's actually syndicated or sold to large groups of investors. So high-yield bonds, leverage loans, banks don't lend those. Banks arrange those deals, maybe do temporary underwritten debt commitments. But their goal is to sell it to hundreds of institutional asset managers. Private credit is a really broad term that encompasses basically many different types of non-bank lending. And one of the biggest subsets of that is direct lending, which refers to, borrowing from corporations specifically. And so private credit / direct lending has provided these really big companies with an alternative. So they don't have to deal with banks. They don't have to deal with, syndicating their debt out to hundreds of institutional investors. It's just a few people in a room and they come to an agreement and do a deal. And what we're now seeing banks do, they have these big junk bond leverage loan businesses, and those are losing market share to all these private credit lenders. And so they want to reinsert themselves back into this process. And so they're trying a variety of different strategies to still be relevant and basically still be the middleman in some ways while limiting risk on their balance sheet.
Yeah, I guess, can you unpack that a little bit, limiting the risks on the balance sheet? Because that seems to me to be really the key thing, because we got a very interesting lesson in that during the financial crisis on what happens when banks don't have a well-managed balance sheet. So what's better, new, different about this time around?
So the key thing banks are doing this time is they're trying to basically find outside partners. So for example, Barclays is discussing this with AGL and also the Abu Dhabi Investment Authority, where those guys are the ones who actually provide the cash. And the bank just originates or finds the loan. And all these strategies vary, and they're still very much in progress. So we know, for example, JP Morgan and Citi and Morgan Stanley are all in the process of trying to raise money, find outside partners to work with. And in all of those, most likely the bank will use a little bit of its balance sheet. So that way interests are aligned, they still have some skin in the game, but it's only a small portion. And then most of the money from the loans will come from these other asset managers. And that way it limits the risk for the bank's own balance sheet.
Paul, at the end of the day, is this all about fees? Is this why traditional Wall Street banks are getting into private credit? They want in on those fees?
It is a huge portion is about fees, but the other thing is also the relationships. So when a company arranges a debt deal for, whatever big corporation you can think of, or on behalf of a private equity sponsor, that lending or that arranging of that deal, it's not just about that deal. It's about having a relationship with that company. So later on, when that company needs help doing M&A, when that company needs help hedging or with cash management, that bank is the first person they call. And if banks are cut out of the process, that relationship starts to go away. It starts to erode. And that can hurt all the other business lines a bank also has. So banks are trying to protect their fees, but they're also trying to maintain their relationships.
I mean, thinking about the workers who staff desks like the leveraged finance desk, what's going to be their role going forward? Is there still a home in corporate finance for transactions done through these traditional desks? Or have they really lost the argument there?
So that's an important point. High-yield bonds, leveraged loans, those are not going away. There's still huge markets in the U.S., both exceed $1 trillion in size. And I think the distinction is they're not going away, but now we have this third leg of the leveraged finance markets, and that's direct lending. So now when a company wants to borrow money, they look at the junk bond, the leveraged loan, and the direct loan option, and then choose among those three. So I think there's still absolutely lots of room for all three markets to exist. But some of that growth of direct lending has definitely come at the expense of high-yield bonds and leveraged loans, and they've lost a lot of deals they would otherwise would have gotten. Now, the staffing question is interesting because I talk to a lot of Levin bankers, and I've definitely had a couple of them ask me, "Hey, Paula, do you know of any private credit shops that are hiring these days?" So I think we will see a lot of talent go back and forth. You can also make very lucrative just carry fees, basically, if you do private credit. So it will be interesting to see how people, decide to change their jobs over time.
Paula, financial institutions, big banks, traditional lenders are heavily regulated. I think, well, I guess if I say heavily regulated, it's kind of subjective, but, I guess they would argue they're heavily regulated. They're not regulated the same as some of the private credit or alternatives providers. Talk to me about where regulation comes into this, because can the big banks actually do what the private lenders do if they have to abide by different set of regulations?
The answer is not really, and that's why they're trying to get these partnerships with other asset managers. So banks are especially limited in two ways. First of all, they have the capital charges. So if they do like a big long-term loan for a risky company, that is a very high capital charge. And they have to put a lot of money behind that loan to make regulators happy. In addition, in the past, regulators have had these things called the leverage lending guidelines, which essentially capped the amount of debt to earnings of any individual transaction a bank was part of. So it capped leverage at around 6 times. Those have technically been repealed, but I think a lot of banks still try to follow them to not annoy regulators. There's, the formal guidance from regulators, and then there's the angry phone calls a bank might get in the background that they want to avoid. So banks are very limited by those two things. And that means, if they partner with an outside private credit firm or asset manager, and most of that's not on their balance sheet, then the loans aren't, regulated in the same way. They don't have to worry about the capital charges as much. And if it's mostly led by someone else, then I think there's questions over whether the leverage lending guidelines would apply or not. So I think, finding these outside partners is also about keeping regulators happy and not doing anything too risky with the bank balance sheet.
So can you talk us through a little bit about what are the big risks that the average taxpayer needs to think about when you think about the private credit market? Because the whole point about banks having higher capital requirements is to protect the taxpayer in case banks make some bad bets. And it looks like that kind of thinking, from the sounds of what you're saying, is doing its job.
Yeah, so the reason why banks are so heavily regulated is really about there being a deposit base. And the institutions themselves are very highly levered. And so you never want a situation where I, as just an average person, tries to withdraw money and I can't get it. But private credit is different because these are often long-term funds that are locked up for years at a time. There's no deposits that can run away, right? These are locked up for 7, 8 years, sometimes more, sometimes less. And what that means is that it's a less flighty-based capital. So the pro of doing private credit for these loans is you're matching long-term assets and long-term liabilities, which is a good thing. But I think where regulators get nervous is that it is very private. That's in the name. And I think they're very afraid of not knowing what they don't know. I think they're afraid that they won't be able to spot the next credit crunch if it does happen in that space.
Paula
and so more and
Seligson,
more of the economy relies on that's just an issue for them.
Paula, we got to leave it there. Really appreciate you joining us. Check out Paula's Big Take and more at Bloomberg.com/Big Take. Paula is private credit and leverage finance senior reporter for Bloomberg News. Let's get down to Scott Carr in the Bloomberg 99.1 newsroom. Hey, Scott.
Hey, Tim, thanks, and good afternoon. Israel is showing the world what it calls a vast tunnel network underneath Gaza City created by Hamas. Israeli officials say it includes command and control centers and meeting rooms. Israel's not confirming reports it has started pumping seawater into the tunnels. At least 15 people are dead, 24 injured after a mass shooting at Charles University in Prague. The shooting happened near the Charles Bridge, a popular tourist site. Officials say the gunman was also killed. During a phone conversation today, reports say President Joe Biden and Mexican President Andres Manuel Lopez Obrador agreed that more enforcement is needed at the U.S. border, as record numbers of people try to enter the U.S. illegally has led to multiple legal problems and disruptions in trade. National Security spokesperson John Kirby said today a group of top administration officials, including the U.S. Secretary of State, will go to Mexico soon to meet with Lopez Obrador.
One of the things that President Lopez Obrador and the president talked about today was trying to work on getting at the root causes of migration. We're seeing record levels of people. More people are on the move in this hemisphere than has been the case since World War II. There's a lot of factors, and part of that is, of course, dealing with instability, political and domestic instability in the region.
Kirby says the leaders spoke about what could be done by Mexico to slow down illegal migration. As promised, Apple's now pulled its Apple Watch Series 9 and Ultra 2 models from its online store to meet a ban ordered by the U.S. Trade Representative. This after a patent dispute between Apple and electronics company Massimo. Today's the shortest day of the year in the U.S. Winter solstice begins tonight at 10:27 p.m. Global news 24 hours a day and when you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Dramatically different tone to the market on this Thursday afternoon compared to this time yesterday. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shaw. That's right. U.S. stocks in the green after yesterday's plunge, with the Dow currently up 300 points. S&P's gained 44, while the Nasdaq climbs 1.2%. The U.S. 10-year yield at 3.89%. Gold is up 12, oil in the red, and Bitcoin is higher by 0.6%. Among the main 11 S&P sectors, leaders were consumer discretionary and tech. Only utilities fell, and leaders to the upside in the Dow, Intel and Salesforce, while Cisco and Apple led to the downside. After earnings, paychecks fell 7%, while Micron gained 9%. And in the EV space, Tesla sees delays in its Cybertruck battery production. In deal news, Cytokinetics jumped 23% on takeover interest from Novartis. And wrapping things up, Nike reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, here we are, already, at the end of the trading day, just 17 minutes to go to the close of U.S. trading here. And worth repeating some of these numbers because we're seeing a little bit of buying into the close. The Nasdaq up by close to 1.2%, the S&P 500 up by 0.9%, and the Dow up by 0.8%. Let's see what David Dietz has to say about all this. He's Senior Investment Strategist at PPAC Private Wealth Management. He joins us from Summit, New Jersey this afternoon. David, good to have you back with us. How are you?
Doing well. Happy holidays, Tim and Jennifer, I understand.
Yeah, thank you so much. Happy holidays to you as well. Hey, give us your take on this rally that we've seen since October 27th. You're up more than 15% on the S&P 500, even after yesterday's pretty big sell-off. Did this rally catch you off guard?
Well, certainly. I mean, we thought that there was over-depression going into October, where, interest rates were just going higher and higher. And, we heard forecasts from esteemed banking executives of 7% on the 10-year Treasury. And we just thought that had gone way too far. We really thought inflation was coming down at the same time, and people weren't really giving enough recognition to that. They were looking at the last 12 months and not annualizing, shorter periods of time, like 6 months and 3 months, and seeing that indeed those annualized periods of inflation were actually coming down. So we weren't surprised that all of a sudden there was a real remarkable pullback in the yield on fixed income. And that was what stocks needed to light a match, because people were so depressed with the interest rate outlook. And so although 15% is your biggest rally in 3 years, I do think it needs to be put into context with the market having done so poorly since those July peaks in the summertime.
So we're all about to head off on our end-of-year holidays. And it looks like we've got a very nice situation waiting for us in January. We've got the prospect of Fed rate cuts. We've got decent unemployment numbers. We've got falling inflation. So what's the take for stocks when we come back into the new year? What's the outlook for gains?
Well, we are constructive for all of 2024, looking for a 5 to 10% further gain on the S&P 500 by this time next year. However, it's not going to be a straight line. That remarkable 15% up since the end of October is not going to be repeated. It just doesn't work that way. We are still very overbought despite yesterday's mini sell-off. So I think that's going to have to be worked off. we are looking also for some of the stocks that have been the big winners this year. And that would, of course, include some of the Magnificent Seven, to see some selling pressure in the beginning of January. Why? A lot of taxable investors don't want to take those gains now and have to book those taxes for this year. They want to push it off. So we could see some of the winners be under some pressure. But of course, there's also a lot of, it was very bifurcated market where a lot of smaller companies, value companies, international companies didn't do well. And we can certainly see a lot of buying in those names in January, the so-called January effect.
Hey, Dave, I want to get to some of your stock picks that you have. But before we do that, I want to go to a question from one of our viewers, listeners out there, a member of the audience, who sent a note asking us to ask you about Bank of America, because you've talked about the stock on our program before. This listener wants to know if you still like Bank of America.
You certainly do. I still think Brian Moynihan is a top flight chief executive officer there. He certainly continues to have the strong support of one of the most prestigious investors in the world. That would be Warren Buffett, who's Berkshire Hathaway.
All right, let's try that again. David, I don't know if you can hear me. Okay. Hey, let's take a quick look at the markets and right now check out what the S&P 500 is doing. It's up close to 1% right now as the S&P 500 sees a little bit of buying, Jennifer, into the close right now. The NASDAQ is continuing to move higher as well, up by about 1.2%, and the Dow up by about 0.8%.
Yeah, it's interesting because also, I'm looking at the bond market and it looks like we're seeing some changes in the yield there, a little pullback there in the 10-year. And, it's going to be a bit of a trick for all of us coming into the new year because it's all about the Fed. And we had the Fed coming out and saying, all but saying the cuts are coming. And then as the weeks wore on after that Fed meeting, some officials came out and poured a bit of cold water on that and saying, hey, now don't get ahead of yourselves. Let's not expect it all in the first quarter. And so that could really have an impact on stocks.
So, okay, you bring up such a good point, and it's one that a few of our guests made yesterday, which is like, okay, wait a second here. The market, the Federal Reserve, the indications that we got from the dot plot are 3 rate cuts next year. The market's expecting 6. So there's this disconnect right now that still exists.
And that disconnect is fascinating because we've got 3 points on the dot plot for 3 rate cuts. Yeah. And so where's this all coming from? But I guess, you've got to have, it's optimism. Who knew? But, maybe the thing to do is be adults and manage our expectations because it's got to be data dependent and we've got to see that inflation number come back down. And I'll tell you one big worry that I have about it is what's going to be happening to the supply chains. We've got the difficulty with the cargo ships in the Red Sea, and that will have a knock-on effect as we all learn to our costs during the pandemic.
Yeah, you bring up a really good point about the supply chain stuff. I mean, it wasn't that long ago that we were talking about lines of container ships outside of the ports of Los Angeles and Long Beach, and they were just waiting to get in as a result of people moving from services to goods during the pandemic and the snarls that we saw there. We know the global supply chain is just so delicate. So seeing a important trade route like that get cut off it could certainly have big implications. Hey, remember we talked to Steve Matthews a little earlier, and he said keep an eye on the economic data that we get tomorrow?
Yeah.
It's not going to be a quiet day tomorrow. I mean, we get a lot of data tomorrow. We get Kansas City Fed Services activity. We also get University of Michigan sentiment for December, get new home sales for November. We get personal income. And then, of course, PCE as well. So there's a lot of data tomorrow.
There's going to be a lot for the market to digest. And as you and I both know, people are heading out for their holidays. And so there's going to be a lot of volatility. And it's just going to be a matter of, are people going to be a little bit nervous about it, or are they going to just try to wait it through?
I think the lower gas prices has a lot to do with sentiment and the way that people feel. After seeing gas prices spike just about 2 years ago, with the start of Russia's invasion of Ukraine, and then seeing the pullback over the last few months, I think that a lot of people really feel that. We're going to be speaking with a guest a little later who focuses on the middle-income consumer in the U.S. and the effect of inflation on that middle-income consumer. So The results of a recent survey might surprise you. That's all I'm going to say, but he's going to be joining us a little after 4 o'clock Wall Street time. Taking a look at the major indices, still seeing some buy-in. NASDAQ higher by 1.2, the Dow higher by 0.8%, the S&P 500 higher by just about 0.9%. You're listening and watching Bloomberg Business Week.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. We are minutes away from the latest numbers out of Nike. Nike shares are trading higher ahead of its quarterly report, up 0.8% right now. Nike investors are expected to zero in on the sneaker and sportswear maker's share of China sales compared to local brands. Joe Easton follows Nike for Bloomberg News.
So I think it's looking pretty weak potentially for Nike. So this time a year ago, it was a really good quarter. So they just finally reduced the inventories that they built up during the pandemic in terms of the retailers. So the stock rose like 15% that day. So now the year-on-year comparatives are really tough. And there's also data, if you look at credit card spending, Google Trends, that kind of thing, that shows in key areas like sports shoes, running shoes, Nike is actually losing market share to newer brands.
And you can hear more of the conversation with Joe Easton on the Brief podcast. You can download it wherever you get your podcasts. Nike shares ahead of its report, again, up now by 0.8%. Shares of Cytokinetics jumped the most in more than 2 years after a report that 2 large drug makers are considering buying the biotech firm. The company is seeing takeover interest from Novartis and AstraZeneca, according to Deal Reporter. Shares of Cytokinetics up now by 25.6%. Carnival Corp shares sailing higher after the cruise line company reported a narrower than expected adjusted loss per share in the fourth quarter. And those are our top company stories at this hour. I'm Charlie Pelletan. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovec and Jennifer Ryan in for Carol Massar this afternoon. We're still seeing some buying into the close. You just heard the numbers there from Charlie, but they're worth repeating as we're up over 8% on the S&P 500. The NASDAQ up by close to 1.3 and the Dow up by more than 0.8%. Hey, Jennifer, you actually put this story on my radar, pun intended, a little earlier this morning. It's about a 60-minute flight that is the world's busiest flight because of the boom in Asian travel right now.
Yeah, so it's the 1-hour flight between Singapore and Kuala Lumpur in Malaysia. And I find that fascinating that that's the world's busiest, because I had always thought it was New York, London, Heathrow, but that is not in fact the case. We've got a list of the world's busiest international flights of 2023 from the sources OAG, and New York JFK to London Heathrow is quite far down on that list. It's around number 8.
Yeah, this is so interesting. So as you mentioned, Kuala Lumpur is Singapore, up 50%, 4.9 million seats in 2023. You've got Cairo and Jeddah, which is a really interesting one too. That's the second most popular route in the world. Saw a 38% increase. And then Hong Kong and Taipei saw a 130% increase between 2022 and 2023. Wow.
It looks like this is all a post-pandemic story, because we've already seen these big pickups in the U.S. and Europe, and now here finally Asia is having its say.
Because Asia was so late to open relative to the rest of the world. So New York JFK to London Heathrow still had 3.9 million passengers this year. That was a 24% increase over last year. But you're right. I mean, the vast majority of these are in countries in Asia.
And I find it interesting that the biggest gainer is a 1-hour flight, because if we were in, say, France, something like that, there would be a lot of pressure from the government to get those passengers to shift to taking the train.
I was going to say, yeah, jump on the train. It's actually like a lot more comfortable, too.
Exactly.
Hey, this article is great. You got to check it out because it also has the busiest airports in the world. Go to none other than Atlanta to find the busiest airport. 61.2 million seats in 2023. That was a 12% increase over last year. A lot of green on these charts because we saw increases in all of these areas.
Yeah, I would very much like to know what happened to people's travel times at these airports. How did they go getting through security? Did everyone make their flights on time?
Yeah, that's a good question. I think the answer is no. Hey, stay tuned because we're going to be joined by our TV team in just a minute for our countdown to the close. Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with our friends Tim Stenovec and Jennifer Ryan. Welcome to our audiences across our Bloomberg platforms, television, radio, and our partnership with those folks streaming this on YouTube. Last time we spoke, Tim, it looked like the market was posting some relatively modest gains, but we see a huge uptick in volatility and a huge uptick in prices.
Yeah, I wouldn't call these modest, especially after what we saw a little earlier in the day. We're seeing stocks higher by 1% pretty much across the board, at least right now, except for the Dow, which is up by 0.9%. So perhaps people coming in and buying the dip, or maybe yesterday was a little bit of an aberration with this rally continuing to march higher.
Yeah, and in particular, the Russell 2000 doing better, continuing its streak of outperforming the big, broad indexes since late October. And by the way, the Russell 2000 entering a bull market this week.
It's interesting, too. I mean, we had some of the folks over at Citi, in fact, two different strategist teams, kind of talking about this idea of maybe buying the dip. Basically, the idea we were going to see more pullbacks, maybe not to the extreme as what we saw yesterday, but quite a few pullbacks over the next few weeks here. But the idea that that would just lead to sort of entry opportunities, primarily based on this theory of a broadening out of the rally. So the idea that you can pick and choose other companies beyond that Magnificent Seven.
You know, I was surprised to see, I looked at money market funds today to see how much cash is still in them, Romaine.
Yeah.
It's still close to $6 trillion in money market funds.
It's a lot there.
It hasn't come off the sidelines yet.
And I wonder, I wonder if it is. I mean, because there's been a lot of talk that it might just move into sort of other cash-like instruments, maybe slightly longer duration, but whether it actually flows back into equities or not remains to be seen. Are you okay? What's going on with your voice here?
I don't know what's going on. I feel fine. I just don't sound good.
Okay.
Not good for 3 hours of radio.
Okay, be careful, Jennifer. Dow Jones Industrial Average going to finish the day higher by about 322 points, up about 0.9%. The S&P 500 posting a 1% gain on the day, or roughly about 48 points, while the NASDAQ Composite higher by 186 points, or about 1.3%. While the Russell 2000, that's your outperformer here on the day, a 1.7% gain. Then that's just coming off, of course, the big losses we saw yesterday. We should point out all of these gains we see today, not quite enough to claw back the losses from yesterday here, but definitely made some meaningful strides towards
still pretty broad-based as far as the gains look today. 458 stocks in the S&P 500 is Scarlet moving higher today. Only 42 moved lower. In the Dow, 28 higher, only 2 declined.
Yeah, overwhelmingly to the upside, and that's what you see when you look at the industry groups. So if you split up the S&P 500 into 24 groups, usually there's a smattering of red, there's a smattering of green, but you look at it today, it's green all across the board. You have all 24 groups. You can see climbing and leading the way, autos and components, and then you've got the chip companies. Micron is one of those names. Healthcare and equipment companies up by 1.5%. The laggards are tech, hardware, utilities, and commercial and professional services.
Yeah, if you're just listening to us right now, there's 0 red on Scarlett's screen. So I feel bad for Jennifer because she had to do the decliners today. My job was easy, finding the gainers. I want to start with one that Scarlett mentioned, Micron, among the best performers that I took a look at today, up more than 8.6%. Having their best day, these shares having actually their best day since 2021, climbing to levels last seen since last year. The company, as we mentioned yesterday, after the close, gave a strong revenue forecast when it released its quarterly report. Data center demand is compensating for a slowly recovering market for PCs and for smartphones. Hey, let's take a look at some of the cruise line operators. Carnival Corporation finishing the day higher on the day. Also, Norwegian and Royal Caribbean finished higher as well. Carnival up by 6.2% after the cruise line company reported a narrower than expected adjusted loss per share for the fourth quarter. Analysts who saw these numbers actually said that the profit guidance that the company provided for the first quarter of 2024 was, quote, conservative, still sending shares up by 6.2%. And then ticker KMX, CarMax. Shares were higher earlier in the day by as much as 13%. Paired some of those gains, finishing the day higher right now by about 5.2%. The company reported third quarter earnings that beat the average analyst estimates, strong profit per vehicle, cost cuts, and then, you know, investors, Jennifer, they always love a good stock buyback. The company resuming its stock buyback program.
So now let me go into the decliners, such as they are on a day where there's so much green. One of them that I want to talk about is Apple. It's down less than 1%. And, you know, it's had nearly $1 trillion in market value this year. And so investors are asking, well, what's next? Because they've got a lot of headwinds to think about. They've got to arrest 4 consecutive quarters of declining revenue. They've got uncertainty in China to deal with. And then, you know, some government agencies that are cracking down on foreign-made devices. And that was before we started seeing these headlines about the difficulties with the Apple Watch. Because it looks like they've pulled some of those models from the online store, which is not what one wants to really see before the Christmas season.
Hey, I have a question for Tim. Do you use like those blood oxygen kind of measurement things that sort of Apple has gotten caught up in with this patent?
I have yet to buy an Apple Watch, and every year I'm thinking this is going to be the year that I do it. I do like the idea of all the health stuff that they've.
I mean, I asked you because you're clly the fittest guy on the program right now.
I've never used any of that stuff. I do use a heart rate
for our radio audience. We should
when I go cycling.
Just rock hard at have.
All right, back to you, Romain.
Jennifer, continue. Just ignore us.
I will do my best. So now the last decliners I want to talk about are Warner Brothers, which is down about 1.5%, and Paramount, which is down about 2.8%. And so these companies have held talks on a possible merger, and this is going to potentially combine some of the biggest media companies in the world. So we're talking about pay TV stations like HBO, famous Hollywood properties like the Paramount lot. But it looks like the market really isn't loving this idea. I spoke to Kevin Neer, he's an analyst at Bloomberg Intelligence, and what he said is actually both of these companies have a lot of debt and also a lot of overlapping businesses, so they're not completely sure that this is the best fit.
And it's also not going to make things cheaper for us, the consumer. They'll be combined, and you'll have everything on one platform, so it'll be a little easier to find things. But it's unlikely that they're going to reduce prices because right now they need to make up for the fact that they don't have enough. They're not bringing enough revenue for all the costs that they have accumulated.
Yeah, it's an interesting question to see what the regulatory reception is going to be for this deal, because they've got some overlapping businesses, but then again, it's kind of like what counts as an overlapping business these days in the era of streaming.
Yeah, good point.
And then, there's going to be some execution risk in terms of when this is going to actually be able to close. So it looks like it might not be an immediate story, and so that will be something that investors will want to watch very carefully.
All right, we should point out we are keeping an eye on earnings here, expecting to get Nike after the bell, but let's check in with what happened in the rate space here. Remember, yesterday we had that 8 basis point drop on the benchmark 10-year yield. Today, those yields went back up by about half that amount, about 4 basis points there. You see the moves across the other part of the curve here. They were all across the curve to the upside here, from the 2-year all the way down to the 30 here, but not quite enough to recoup from what we saw yesterday. We should point out, though, the net effect of it all, at least over this past 4 days here, we really aren't that much further away from where we were about a week ago on last Friday here. So depending on what happens tomorrow, it looks like we could end up somewhat unchanged here in the yield space heading into the final week of the year.
And in terms of what's on tap for tomorrow, there's a lot of data coming out. You've got personal income, personal spending for November. So yes, backwards looking. But the real one that everyone's looking at is the PCE deflator, which is the Fed's favored form of looking at inflation. On top of that, you have new home sales and then consumer confidence, at least soft data from the University of Michigan.
Hey, so much for a quiet week leading into the holidays. I mean, tomorrow's data dump is pretty massive. And again, we're still waiting Nike earnings right now. It's a good check on the consumer, but also a good check on what's going on in China, because the company certainly relies on China a lot for its revenue.
And then, as we've been saying throughout the whole program, the inflation number is really going to be the key thing, because the Fed's going to be data dependent, and it just depends if we get a nasty surprise tomorrow on inflation, if traders are going to be willing to sort of look through that and count on what the Fed told them at their last meeting, that some rate cuts are coming, or if they get a little bit nervous.
I think it's interesting, though, that when you look at some of the the estimates of economists that we surveyed here, I think it's interesting. Everyone's focused on the inflation side, but I thought it was interesting to see that some of those personal spending numbers are continuing to go up, or at least the expectation is that they will go up, as well as the income levels as well, too. So there is kind of a balance there, that even if we do maybe get a potential upside surprise on the inflation front, if we also get an upside surprise on those other two metrics, maybe that'll provide, I guess, enough of a cushion for the Fed to say, okay, everything's still okay.
And also the new home sales, all the housing numbers have started to show a pickup, as well as mortgage rates have come down. And the home builders themselves are offering buybacks on those rates so that people don't actually have to pay, what is it now, the 6.8% for the 30-year fixed rate mortgage?
It's less than 7%.
Less than 7.
Less than it was just a few weeks ago. Happy holidays, everyone. Not going to see you until the
Rest
new
your
year.
voice, Tim.
I will. Where are you going, Tim? I'm going to rest. Going to California.
Oh, okay,
yeah.
cool.
Yeah, it'll be fun. I'll be on a plane for a long time.
Say hi to Gavin Newsom for me.
I will. He will.
He's quite a guy.
That is going to do it for our Beyond the Bell, our cross-platform coverage right here on Bloomberg Television, Radio, YouTube, and Bloomberg Originals. Meantime, catch us tomorrow, same time, same place. Happy holidays. Happy New Year, everyone.
Clowns to the left of me, jokers to the right. Here I am, stuck in the middle with you.
Well, just an absolutely perfect guest, kind of really given our conversation that we just had with our TV team, Jennifer, about the consumer and inflation, because the theme of the past 2 months or so, and kind of feels like the theme of my life because it's all I talk about every single day, is that inflation has moderated. After all, financial markets are betting that the tough part of the Fed's job is behind it, and the Fed is going to cut rates 6 times next year. All that said, our next guest says middle-income families are still feeling the squeeze. Glenn J. Williams is CEO of the financial services company Primerica. It's a firm that specializes in serving middle-income households in the U.S., Canada, and more. The company's out with a new report called Perception versus Reality, examining middle-income households' financial outlook heading into 2024. Good to have you with us, Glenn. How are you?
Doing great, Tim. How about you?
Yeah, we're doing really well. Thanks so much for joining us today. Before we get to the report, just give us an idea of the types of households that you serve at Primerica. You call them middle-income households, but how do you define that?
We do, Tim. We define those households as having household incomes between about $30,000 and $130,000 a year. That takes up about 56% of U.S. households. So it's a pretty wide cut. Clearly, there are households that are earning less than that and struggling even more. We deal with a few of those, and we deal with quite a number above the 130,000 mark. But the vast majority of the families that we're advising are in that 30 to 130,000 a year range.
And what's so important about these tens of millions of households, these tens of millions of families, these customers that you have, is that inflation hits these folks harder than it hits people who make more money, because a larger portion of what these people earn goes to gas, goes to food, goes to childcare. So talk to me a little bit about what you're seeing going into next year, given that we are seeing actually inflation moderate. But as Steve Williams told us earlier in the day, if you're still paying more, 20 or 30% more for something than you did in 2019, it doesn't really feel like prices are coming down.
Yeah, that is the challenge, Tim. As you've described it, these families have every dollar in play at all times. And traditionally, because they have smaller amounts to invest, smaller to purchase financial services with, they tend to be somewhat ignored by the industry, who by and large has moved upscale. And so we feel a special responsibility to these families because we can access them, we can serve them, and they are under stress. They don't have extra dollars in the best of times, much less in times like these. And as you point out, it's the compounding effect of inflation over time. Our studies and the Household Budget Index indicates that the average middle-income family has a deficit from the last 20, 30 months of almost $2,500. And so while maybe the hole is not getting any deeper, they're down there pretty deep already, and we've got to help get them out. And that's the challenge these families face.
What can you tell us about what their spending habits are starting to look like over the Christmas holidays? And what are the concerns that they're expressing to you? Because, Tim makes a really good point that, we're saying that inflation's moderating, but it's still going to feel pretty hard for consumers. And so by the same token, it sounds like perhaps some of these folks they've still got their jobs. They might still have a little bit of investment to look at, and it looks like there's some good feeling there with a lot of green in the stock market over this year. So what's your take on how they're feeling about this holiday season and spending going into next year?
Yeah, Jennifer, you're right. There are some positives going on. Clearly, employment strong. More people do have their jobs. We're seeing incomes increase some as well as the slowing of inflation. So there's some positive things happening as well. But by and large, most families are struggling. They're pretty scarred financially and in some cases emotionally by what they've been through the last couple of years. And so we are seeing them reporting slowing down their spending this holiday versus past holidays. But in reality, that's very difficult to do. And what's really concerning is that we're seeing more and more families that are relying on credit cards and even withdrawals from those savings that you mentioned to take care of month-to-month expenses in normal months, particularly when expenses go up due to the holidays. And of course, overuse of credit and taking money out of savings that's designed for long-term goals like retirement just has a terrible impact over time. They lose the time value of money, the compounding of returns on their investments. The opposite is happening if they're using credit cards with very high interest rates, and if they're not paying their balances, those are compounding. And so the alternatives to cutting back spending are very difficult for middle-income families, and that's why they're struggling, and that's why in many cases we see in our surveys, our qualitative surveys, that they're struggling financially and emotionally at the same time.
Glenn, does all of this taken together at all paint a picture of a recession next year? Is this recessionary to you?
I think for these families, it feels like it. That's a tough question we've been trying to get the answer to for a number of years now. But I think these families feel like relief is not just around the corner.
But the reason I ask is because if consumers pull back on spending and consumer spending powers this economy, and the families that you serve account for more than half of the households in this country, if they're pulling back to a certain extent, does that mean the economy is going to go into recession?
I believe we're certainly close to the edge, Tim. We've seen spending be unusually strong overall, and we've had a lot of discussions about the consumer spending that hasn't slowed as much as we would expect. Doesn't sound consistent with what we're hearing and seeing in the middle market. So maybe it's being driven outside the middle market, but we're clearly seeing these families slow down. And enough of that will lead to recessionary pressure if it continues long enough.
I wonder if you think policymakers and indeed Wall Street traders are really alive to the risks here of recession, because there's just so much talk about a soft landing, and then we're talking earlier on the program about the last few holdouts on Wall Street with a bear case for the United States. And I wonder if you do start seeing a real pullback in spending from the kinds of consumers you serve, if this will just pass the rest of the economy. I mean, what I mean by that is the wealthier part of the economy, if it'll pass them right by, because the macro numbers will hold up because their spending will continue.
Well, there's always a danger that Wall Street is disconnected from Main Street for sure. But I don't know the answer to that. I don't know whether the middle income challenges are going to be large enough, long enough to overwhelm the other pressures maybe that are moving in a more positive direction. It's clearly a tug of war going on, and the longer it continues, the riskier it gets. I think those that are planning for the future should clearly be taking this possibility into consideration in their planning, because there is a reasonable enough possibility of it that you've got to plan around it. You got to say what happens if the spending slows so much, so rapidly for so long that it starts to send us in the direction of a recession. And those that are planning for their finances, for both families and for the rest of our country, certainly need to keep that in the back of their mind. I don't know where it's going to go yet. I don't think anyone does, but it's clearly a risk.
Hey, I just wanted to, sorry to interrupt, Jennifer. I just wanted to let our audience know that shares of Nike are bouncing around the after hours, moving higher and then moving lower after the company reported its results just a couple minutes ago. Earnings per share for the second quarter came in way above estimates at $1.03 per share versus estimates of 85 cents a share. Once again, though, shares in the after hours are kind of bouncing around a little bit.
Glenn, thanks so much. Just real quick, I just want to get back to you on one point about the kinds of customers that you do serve. Do you see that there's a big difference between the top end and the bottom end? Is it really quite tight for people at the lower end, but maybe at the top end it's a little bit easier? And part of the reason why I ask that is because maybe at the top end they've got a little bit more wiggle room to cope in case the Fed delays its move on the rate cuts.
Yeah, absolutely. 30 to 130,000 is a wide range. And so we do see families with tighter budget, smaller incomes at the lower end struggling more. At the same time, you hear more and more every day about people that are making six figures in their household and they feel like they're living paycheck to paycheck. So yes, absolutely, it is more severe at the lower end of the range, but there's a lot of pressure throughout the range from 30 to 130.
Hey, Glenn, really appreciate you joining us. You got to come back in the early part of next year because this is a really, really fascinating report that you and the team over at Primerica have put together. Once again, it's the Perception versus Reality report that examines middle-income households' financial outlook heading into 2024. That's Glenn J. Williams, CEO of the financial services company Primerica, joining us on Zoom from Duluth, Georgia. Shares of Nike right now moving lower by about 3.8% in the after hours. The company says it's streamlining the organization. It sees pre-tax charges of between $400 million and $450 million. The company also says that looking ahead to a softer second half revenue outlook. We're going to continue our coverage with Nike in just a few minutes. You're listening and watching Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got Nike shares now down by 4.2% after hours. Nike did report revenue for the second quarter that met the average analyst estimate. Second quarter EPS $1.03. Estimates there 85 cents. Nike says it is streamlining the organization, sees pre-tax charges in the range of $400 to $450 million. But perhaps the headline that's sending the stock lower, Nike is looking ahead to a softer second half revenue outlook. Again, after hours, Nike now tumbling by 4.7%. We got a lot more all about Nike coming up with Bloomberg's Red Brown in just a moment. The Dow, the S&P, NASDAQ rebounded from yesterday's sell-off. Didn't make up all the losses, but nonetheless, green on the screen as we wrap things up right now. S&P up 48, 47.46 on the S&P 500 index. That was a gain today of 1%. The Dow up 322, higher by 0.9%. NASDAQ, the composite index, up 185, up by 1.3%. The Russell 2000, the outperformer, that index today, index of small cap shares, up by 1.7%. 10-year yield 3.88%. The 2-year 4.35%. Spot gold up $13 the ounce to $2,044, up by 0.7%. West Texas Intermediate crude fell 0.3%, $73.99 for a barrel of West Texas Intermediate crude. Once again, Nike's numbers are out. After hours, the stock is trading lower now by roughly 4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. We're continuing with Nike and our coverage around Nike's latest quarterly report. Shares, as Charlie just mentioned, down about 4.7% in the after hours. Worth repeating some of these headlines, certainly. The company is saying that it's streamlining the organization and sees pre-tax charges of between $400 and $450 million. The company says that charges are to be likely recognized in the third quarter of fiscal year 2024. For more, let's go to Bloomberg News earnings reporter Red Brown. He joins us on Zoom from New York City. He's had about 10 minutes to look at these numbers, Red. We're seeing the way that investors are reacting in the after hours, sending shares down about 4.5% as we speak. What sticks out to you about Nike's report?
I think the number that's really jumping off the page for me is the results in China. So they missed sales there, reporting around 1.8 billion when Wall Street was expecting somewhere closer to 2 billion, actually. And the reason I think that this number is so important is that Nike's been kind of playing this dangerous game, if you will, where a lot of their growth is really heavily reliant on China when their sales in Europe, their sales in America, their bigger markets have really slowed down. So with those sales numbers in China coming in a little bit below expectations, I think that is a little bit of a worry for the company when they do have such an outsized importance for Nike.
Is there the prospect for those numbers to turn around in China, or is it better for Nike to think a little bit more on focusing on the U.S. and Europe, where we've got the prospect, at least in the U.S., of lower borrowing costs, potentially spurring some consumer spending there?
No, I think it's a good point. Just because of the volatility of the Chinese economy, obviously that's well outside of Nike's control. And there might be a potential for them to want to shift their focus back to these markets where, I don't want to go too far out on a limb here, but maybe the economic picture is starting to clarify a little bit more, especially here in America. So I think that it could be something that we might want to get a little bit more clarity from the company on during the earnings call.
Hey, speaking of clarity, I do want to make a quick correction to something I said earlier. Revenue missed the average analyst estimate just slightly. It came in at $13.39 billion, which was up 0.5% year over year. The estimates, though, were for $13.46 billion. Okay, Red, we talked about China, but it also seems like what's getting a lot of attention right now is the company announcing this reorg, this $2 billion in cost savings that they're looking to find. They said that they're going to be pre-tax costs around $400 to $450 million when it comes to employee severance, i.e., they're doing a reorg. They're going to have to pay out employees who they end up firing or laying off as a result of this. Big picture, What's going on at Nike right now?
I mean, I think Nike is not immune to a lot of the pressures that retail has been going through over the past few years as we're coming out of the pandemic still. I think that the effects of that sort of, real shock to retailers is still something that they're working through. So if you look in recent quarters over the past about 2 years, Nike has been seeing some pretty significant slowdowns in their earnings per share numbers. So strategic shift has kind of been coming, I guess you could say, for them. While they need to find some way to improve their margins, they can't keep offering the promotions that they have been in the past to continue to kind of juice the top line. So they're looking for new ways and significant ways to continue to kind of get more out of their business model.
Just to follow up on that point, in the statement, Nike pointed out that some areas of potential savings include increasing automation and use of technology. Can you talk a little bit about what Nike's play there is in terms of the technology?
I'm a little bit unfamiliar with what they could do, but a lot of retailers will point to things like that. If there's anywhere in their supply chain that they can maybe automate a little bit more, anything in their warehousing that they can make a little bit more advanced technologically, that's obviously an option for them, especially as we see some supply chains starting to shrink down. Could be another area for them to maybe shave a few points, add a few points to their margins.
Brett, I always like to take a look at what's going on with Foot Locker when Nike reports. And indeed, we're seeing shares of Foot Locker down about 3% in the after hours because Nike is such an important company for Foot Locker and vice versa. Foot Locker an important sales channel for Nike. How should investors in Foot Locker read into these results?
Well, just to take a step back from that, we did hear from Nike last quarter during their call that they're working to kind of reset that relationship. One thing to key in on this report still, while we're still waiting to hear some more color on the call, is that their wholesale channel sales in general declined this quarter. That's the third quarter in a row. So I think Foot Locker investors are probably reacting to that number, to seeing a further slowdown within that channel. That's in general, is I think probably a little bit got them a little bit scared.
Well, we know Nike has done a really good job over the last decade in building out its relationship with individual consumers and getting people to buy stuff directly from its website at Nike.com. So is it okay that wholesale is declining if a direct sales relationship is higher margin for Nike?
It's kind of hard to say. It does seem like, like to your point, they have been really emphasizing Nike.com. And the gap between those two sales channels continues to get smaller and smaller. But I think the other side of that coin for Nike is we have seen consumers' behavior shifting back to in-person shopping. They prefer that experience still. So I think that's the sort of the balance for Nike. I don't think they're going to be able to just wholesale ditch brick and mortar and stop investing in those relationships as well with people like retailers like Foot Locker. So it's still kind of a little bit too soon to say maybe for Nike in terms of the long-term vision of which sales channel maybe is higher priority for them.
Oh, interesting. I mean, getting away from the point of the sales channel and looking at its various product lines, are you able to give us any kind of a big picture story about what is the winner and loser here for Nike at this point?
I do think it's interesting that we're kind of just on the cusp of Christmas shopping, right? The period ended at the end of November, and it doesn't seem like there's really an area of strength besides their equipment in terms of actual growth. Both apparel and footwear, which would probably be the more likely categories for holiday shopping, are really kind of tepid in terms of growth. So I don't know how much of a driver equipment sales is going to be for the company going forward. A lot more of their business does come from those other two categories. So again, I think this is just an overall sort of a little bit of a negative picture for Nike, and I think the shares are kind of reflecting that at the moment.
Yeah, I think that's a really good point, Red. Hey, Red, I want to let you catch your breath and look at your screen for a minute while I go through the press release and read a couple of quotes from John Donahoe, the president and CEO of Nike. In addition to that, just a little more color on these cost savings. Donahoe saying in a statement that the quarter showed strong execution by our team as we focus on our winning formula of innovative product, distinctive storytelling, and differentiated marketplace experiences. He said that the second quarter results showed that the company is getting back on their front foot. The company also saying in a statement that it's identifying opportunities to deliver up to $2 billion in cumulative cost savings over the next 3 years, simplifying product assortment, increasing automation, and the use of tech, and streamlining the organization. Red, I want to give you the last word here and just give us your takeaways as we as you continue to and wait for the call. What would you ask on the earnings call today if you could?
I mean, I think we've kind of covered the major topics. I think one thing that has been a topic of interest for me with Nike is the increasing amount of competition that they're facing in their sort of bread and butter product line is running shoes. That's kind of where Nike came from. We saw kind of a small analysis coming out of Morgan Stanley earlier this month where they just did a small sample just here in New York City of what shoes people were wearing. And it was, these alternative brands are really gaining a lot of ground on Nike. So I would want to know kind of what the company's plans are to combat the eroding market share.
Yeah, I remember that report. It's like Hoka and On running. Hey, shares of Nike down about 5.6% as we wait for this call. Red Brown over at covering earnings for Bloomberg. Let's get to Washington, D.C. Scott Carr is in the 991 newsroom. Hey, Scott.
Thanks, Tim. Good afternoon. At least 15 are dead, 24 others injured after a mass shooting at a university in Prague. The shooting happened at Charles University, a popular tourist site. Officials say the gunman was a 24-year-old student at the university and apparently took his own life after the attacks. His father was found dead earlier today. Israel is showing the world what it calls a vast tunnel network underneath Gaza City, created, they say, by Hamas, including command and control centers. Israel is not confirming reports it started pumping seawater into the tunnels, while Hamas says it will not negotiate further prisoner hostage swaps until Israel stands down in the conflict. Former New York City mayor and lawyer for Donald Trump, Rudy Giuliani, has filed for bankruptcy. Bloomberg News reporter Jeremy Hill says Giuliani filed papers seeking protection from creditors in New York, listing debts of as much as $500 million and assets of up to $10 million.
The rules here basically say if you file this petition in federal court in the U.S., all civil litigation against you stops. So a lot of the lawsuits that he's fighting around the country will come to a halt, and any attempts to collect debts against you are at least paused, and a federal judge is brought in to oversee your situation, and he'll get a chance to negotiate with his creditors about the best way to divide up his assets.
Giuliani was ordered last week to pay $148 million to two Georgia election workers after promoting conspiracy theories about them. Fast and Furious star Vin Diesel is being accused of sexual battery by his former assistant, Asa Yanasan, who's filed a lawsuit alleging Diesel assaulted her in a hotel room in 2010. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Nike reported China sales that fell short of market expectations. Also said it's looking for as much as $2 billion in cost savings amid streamlining efforts. Red Brown covers Nike for Bloomberg News. He was interviewed moments ago on Bloomberg Business Week.
I think the number that's really jumping off the page for me is the results in China. So they missed sales there, reporting around 1.8 billion when Wall Street was expecting somewhere closer to 2 billion, actually.
Stocks higher today. David Dietz, senior investment strategist at PPAC Private Wealth Management, was a guest right here on Bloomberg Business Week.
We are constructive for all 2024, looking for a 5 to 10% further gain on the S&P 500 by this time next year. However, it's not going to be a straight line. That remarkable 15% up since the end of October is not going to be repeated. It just doesn't work that way. We are still very overbought despite yesterday's mini sell-off.
Indeed, that sell-off sent the S&P down 1.4% yesterday. Even with that decline, S&P still on track for a winning week, which, if it happens, would be the 8th week of gains in a row. Stocks higher, as I mentioned today, the Dow, the S&P, NASDAQ, all advancing. 10-year yield, 3.89%. 2-year, 4.34%. Spot gold, $14 the ounce higher at $2,045. West Texas Intermediate crude down 0.4%, 73.95 a barrel. Again, after hours, we got Nike shares tumbling. Nike after hours is moving lower. Right now, we've got Nike down by just about 6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, dropping tonight, it's the latest episode of the Business Week show. It's the world's first late-night TV talk show that's about pop business. We're talking money, power, and culture. Bloomberg Business Week contributor Max Abelson goes deep with his guests about the profound and complicated themes that make business and life so interesting. And you know this by now if you've been listening or watching us. Each week there's this theme. Some of the past themes have been risk or moonshots, genius, reputation, and more. This week's theme is really, really interesting. Max and the team focus on survival. So tonight, Max sits down with Avenue Capital Group Chief Executive Officer Mark Lazary, Nobel Peace Prize laureate Nadia Murad, and Kwame Onwuachi, the award-winning chef behind Tatiana. And Max, you guys discussed why survival is so important when it comes to business and life. And we're talking about Max Abelson, of course, Business Week contributor and finance reporter for Bloomberg News, here in the Bloomberg Interactive Brokers studio. Survival.
Survival.
I mean, when you talk about survival, you can talk about it from the perspective of, quote unquote, surviving a challenge, right? Or literal survival.
Or even just sort of the very deeply capitalistic idea of like survival of the fittest, First of all, can I just say thank you so much for your warm and thoughtful introduction.
We love you, Max.
It always makes me feel good to be here with you.
Well, it's a great show, and you guys are doing a fantastic job, and it's a treat that we get to talk to you.
Thank you so much. Well, the reason, if it's a good show, the reason it is because of guests, the guests that we have on who are kind of willing to meet us where we are. We're asking of our guests something a little unusual, which is, rather than just having them on to promote, whatever thing they're working on at the moment. Instead, as you mentioned, it's like we want them on to talk about genius or risk or the themes that would otherwise kind of be a little bit below the surface of a Business Week story. And it's been so much fun as we head towards the season finale coming up soon. It's been really fun to realize that, first of all, some people are stubborn and they don't want to talk at all, as I think all journalists know. And then sometimes people have a real spirit of generosity and are really willing to meet us. And that makes me want to meet them where they are. And, you could have, on the one hand, an extremely wealthy investor like Mark Lazary, who has not just survived the machinery of the markets. He's basically learned how to profit from survival and from failure. He has made a fortune essentially from dealing with companies who are either in bankruptcy or on the verge of bankruptcy, which is one form of survival of the fittest, I guess. And then we have the Chef Kwame you mentioned has certainly, his life story has been about figuring out how to survive. He grew up very poor. His mother didn't always have enough money to put food on the table. And his first restaurant did not survive in a very sort of neon-colored way. Its failure was bright and intense. And then we had Nadia Murad, whose story is really upsetting. She was, essentially the worst thing that could happen to you. She was taken captive in wartime in northern Iraq by the Islamic State. And her survival story is gripping and honestly upsetting. And I feel like together I'm hoping it makes for a kind of a rich tapestry.
I'm so looking forward to hearing more about each of these individual people, but there's something that I think I've spotted in just what you've said now about all of these guests, is that the challenges that they had to overcome really substantial. And there was a definite spot of failure for a lot of them, and not in every case, but a real serious challenge that it looks like, is this the picture of survival?
That's so true. I mean, I feel like you grow up thinking that the adult life and professional life under capitalism is about success and winning. But, to use an extremely, sort of like a straight from childhood metaphor, baseball players who make it to the All-Star game hit 300. They're missing 7 out of 10 times. Mark Lazary said to me that investors are, systematically wrong. They're wrong always. He's had catastrophes in his career, some involving oil spills, Aussie media going down. Yeah. Failure is a part of success in a way that sounds like a cliche, but is borne out by doing journalism about business time and time again.
Well, I want to share a little bit from tonight's episode. Here's just a little bit from your conversation with Nadia Murad, who spoke about how corporations can provide aid in humanitarian crises. Check it out.
Let's talk about corporations, because the work that you do is survivor-centric, and it's based on communities. What would you like to see big corporations do?
I think they can help in so many ways. Because, for example, with my initiative, I started Nadia's initiative because when I was displaced and I saw, people in the camps, hundreds of thousands of people, then I was able to move to Germany with my sister. And when I started this work, I learned that no country was ready to bring millions of refugees or hundreds of thousands of Yazidis to Europe or other places. But keeping them in the camps was not a solution. They're short-term solutions. And I realized that the other sustainable solution is to help people to go back. But no one was ready to invest in Sinjar. People were telling me, well, the town is destroyed. We can't really go back. So we need to work with business leaders and make sure that we add more services to the region.
That's Nadia Murad on how corporations can provide aid in humanitarian crises. That clip from tonight's new episode of the Business Week show. It airs at 10:30 p.m. Wall Street time on Bloomberg Television. So, Max, when you see part of that conversation and you think about, the entire season that you've had where it's sort of this pop business show that not just talks about life, but also talks about business and really gets to the heart of how people are feeling. How do you take what she said about the way that corporations can actually get involved in humanitarian crises? Because we think of NGOs here.
It's a truism, but all stories are, in a way, stories about money and power. Because, Nadia has many levels to her life, and her story, above all, is a human tragedy. But guess what she just did this week? She is the lead plaintiff in a lawsuit filed by her attorney, Amal Clooney, against a French conglomerate. And they are suing to hold it accountable for its work with ISIS. And she wants accountability and money as well. And there are no cataclysms in this world, and I think there are very few successes that don't somehow involve the corporate landscape. And being able to meet individuals, which is what I'm doing on the show, obviously, one by one, hearing their stories, and not only learn about them as people, but try to figure out what their stories have to say about business and about money and about power and about competition has been really fun. And Nadia's a wonderful example. She was young and she went through cataclysm, and yet her story is about money and power.
Well, again, tonight's episode, it's one that you cannot miss. Tonight at 10:30 p.m. Wall Street time, it's the Business Week show on Bloomberg TV and Bloomberg Originals. Max Abelson, Business Week contributor and finance reporter for Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Carnival shares up today by 6.2% after the cruise line company reported a narrower than expected loss per share for the fourth quarter and provided profit guidance for the first quarter of 2024 that Wall Street is deeming conservative. Again, Carnival up 6.2%, rival Norwegian Cruise Line Holdings up 5.2%, and Royal Caribbean shares did advance as well today, also up by 5.2%. CarMax's third quarter results exceeded Wall Street expectations on strong profit per vehicle and cost cuts as it resumed a stock buyback program. Keith Naughton follows the auto industry for Bloomberg News.
You know, what CarMax has done is they're squeezing more profit, selling fewer vehicles. Their same-store sales actually fell by 4%, but they have real solid profits per vehicle that have remained steady even with fewer sales. So that allowed them to have a big earnings beat. They were at 52 cents a share adjusted EPS versus the 42 cents that analysts had expected.
And again, CarMax up today by 5.2%. Rival Carvana was up today by 5%. It is the end of the line for Hyperloop One. That is the futuristic transportation company building tube-encased lines to zip passengers and freight from city to city at airplane-like speeds speed. Sources say Hyperloop One is shutting down. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenevec and Jennifer Ryan in for Carol Massar this afternoon. Let's get a check now on the latest world and national news. We got Scott Carr in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Scott.
Thanks, Tim. Israel is showing the world what it calls a vast tunnel network underneath Gaza City, created, they say, by Hamas. Israeli officials say it includes command and control centers, meeting rooms, and hideouts for top Hamas leaders. Israel's not confirming reports that it started pumping seawater into the tunnels. At least 15 people are dead, 24 injured after a mass shooting at Charles University in Prague. The shooting happened near the Charles Bridge, a popular tourist site. Officials say the gunman took his own life. During a phone conversation today, reports say President Joe Biden and Mexican President Andres Manuel Lopez Obrador agreed that more enforcement is needed at the southern U.S. border, as record numbers of people trying to enter the U.S. illegally has led to multiple problems, including disruptions in trade. National Security spokesman John Kirby said today a group of top administration officials, including the Secretary of State, will go to Mexico to meet with Lopez Obrador in coming days.
One of the things that President Lopez Obrador and the president talked about today was trying to work on getting at the root causes of migration. We're seeing record levels of people. More people are on the move in this hemisphere than has been the case since World War II. There's a lot of factors, and part of that is, of course, dealing with instability, political and domestic instability in the region.
Kirby says the leaders spoke about what could be done by Mexico to slow down illegal migration. As promised, Apple's now pulled its Apple Watches Series 9 and Ultra 2 models from online stores to meet a ban ordered by the U.S. Trade Representative. This after a patent dispute between Apple and electronics company Massimo. Today is the shortest day of the year in the U.S. Winter solstice begins tonight at 10:27 p.m. Eastern, marking the start of winter. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg. Back to you, Tim.
Thank you so much, Scott, for that update. Really do appreciate it. Tim Stenevec and Jennifer Ryan in the Bloomberg Interactive Brokers studio in New York. Jennifer, we've been following what's been happening at Ivy League campuses in the wake of the October 7th attack by Hamas on Israel and the fallout from a much-watched congressional testimony in early December. We've seen a host of donors pull back their donations to various Ivy League universities as a result of what they see as allowing anti-Semitism to flourish on these campuses. And there's a big name that has now added his name to the list of disaffected donors.
That is billionaire Len Blavatnik. Now, this is a story from our Janet Lauren, and she has really been way out in front on a lot of these stories. And what she's written today is the news that his family foundation has given at least $270 million to Harvard, but now it's pausing donations in the wake of University President Claudine Gay's testimony to Congress, the one that you just mentioned.
Yes, so since Hamas's October 7th attack on Israel, alumni from billionaires to recent graduates have said that they're halting gifts until the school does more to address anti-Semitism. It's tarnishing Harvard's brand and damaging its carefully cultivated alumni network. And in turn, Jennifer, it's threatening to dent the finances of the richest and oldest U.S. university at a time when its investment returns are lagging and Congress is actually looking for ways to cut federal support.
I mean, to be sure, Harvard does have an